On January 9, 2023, Representative Earl Buddy Carter, a Republican from Georgia's 1st District, introduced one of the most transformative tax bills in the last 100 years. It isn't a bill designed to give tax cuts to the rich, although some might argue that it is. Nor is it a bill designed to give tax incentives to invest more in green energy. Rather, Representative Carter introduced House Bill 25, or the FairTax Act of 2023. Yes, you heard that correctly. The federal income tax would be no longer. That extra money that is taken out of your check every 2 weeks would now make its way to your bank account. It would be replaced with a national sales tax. But what exactly is a national sales tax? A national sales tax would tax any transaction between businesses and consumers at a fixed rate, similar to the way your state probably runs its sales tax. This tax would only be applied to a new good or service. You cannot be taxed for buying something used, such as a car, home, or appliance. But why do Representative Carter and 26 other Republicans who co-sponsored the bill, including Matt Gaetz, Thomas Massie, Byron Donalds, and Marjorie Taylor Greene, want to pass this act? Section 2, or the congressional findings of the bill, found that the federal income tax retards economic growth and has reduced the standard of living of the American public, impedes the international competitiveness of the United States industry, reduces savings and investment in the United States by taxing income multiple times, slows the capital formation necessary for real wages to steadily increase, lowers productivity, imposes unacceptable and unnecessary administrative and compliance costs on individuals and business taxpayers, is unfair and inequitable, unnecessarily intrudes upon the privacy and civil rights of United States citizens, hides the true cost of government by embedding taxes in the cost of everything Americans buy, is not being complied with the satisfactory levels and therefore raises the tax burden on law-abiding citizens, and impedes upward social mobility. The congressional findings also found the federal payroll taxes raise the cost of employment, destroy jobs, and cause unemployment, and have disproportionately adverse impact on lower-income families. Furthermore, they found the federal estate and gift taxes force family businesses and farms to be sold by the family to pay such taxes, discourage capital formation and entrepreneurship, foster the continued dominance of large enterprises over small family-owned businesses and farms, and impose unacceptably high tax planning costs on small businesses and farms. But when it comes to the national sales tax, they found it would promote savings and investment, fairness, economic growth, raise the standard of living, enhance productivity, reduce burdens on the taxpayers, and much, much more. Now, how would the implementation of the national sales tax work? First, the bill states that the tax rate would be 23%, but that isn't entirely truthful and also misleading. That 23% is tax inclusive, or the percentage you pay is calculated on the total price of the purchase. The everyday rate of the tax would be around 30%. For example, let's say you head to your local grocery store to buy a few things for the week. You buy some eggs, bread, some chips, and a few t-shirts you've been dying to buy. The total price for everything comes out to be $100, but the cashier says the price after tax is $130. How could that be with a 23% tax rate? Shouldn't the total only be $123? Nope. Remember, the tax is tax inclusive. The percentage you pay is calculated on the total price of the purchase. 30 divided by 130 is equal to 23%. And who exactly will be responsible for collecting the tax? The simple answer being the states in which the purchases are made. The states would then turn the money over to the Secretary of Treasury in a timely manner. The states, of course, would be able to retain an administration fee equal to 1/4%, or 25%. But what about your yearly tax return? Instead of filing taxes by April 15th every month, each qualified family shall be eligible to receive a sales tax rebate each month. The sales tax rebate shall be in an amount equal to the product of the rate of tax imposed and the monthly poverty level. The poverty level will be determined by the Department of Health and Human Services, and the checks will be sent out through the Social Security Administration as stated in the bill. This means that each family will receive a check of 23% of the poverty line. The 2021 poverty line in the U.S. for a family of two was $17,420 a year. This is making only $1,451 every month. If we take $1,451 and times it by 23%, we get $333.73. A family of two would get roughly $333 back every month at a 23% rate regardless of their income. What are some of the advantages of the national sales tax? For starters, everyone is taxed at the same flat rate regardless of how much they make. The IRS would no longer be needed, as the Department of Treasury could handle all tax revenues, saving the United States the $80 billion budget. The Inflation Reduction Act gave the IRS to hire 87,000 agents. Anyone who lives in or anyone who is visiting the United States and buys something would be contributing to the national sales tax. You could control how much taxes you pay by growing your own food instead of going to the grocery store, not buying extra things, not purchasing a new TV if the one you have still works, etc., etc. And what are some of the disadvantages of the national sales tax? Lower income families would end up paying a higher percentage of their income on taxes than higher income families. With the IRS gone, who is tracking if businesses are properly paying the taxes? The price of goods would likely rise, and history has taught us that state sales taxes have risen since their implementation, so this one would likely follow suit. Has something like this ever been tried before? Actually, yes, there has been the FairTax Act of 2021, 2019, 2017, and 15. The FairTax Act has been introduced into every Congress since 1999. The bills have never made it out of committee and never saw the light of day for a vote on the House floor. But as part of Republicans' negotiations to make Kevin McCarthy Speaker of the House, he promised to give the bill a vote on the House floor. We could see Representative Carter's bill get a vote this year in 2023. But what is public support like? A Rasmussen poll in 2013 found that Americans are opposed to a national sales tax, with only 22% of adults in favor, while 62% were opposed to the creation of such tax. And a 2023 report from Navigator Research found that overall support is about 28%, while 53% of Americans are opposed to the new tax. The report even found that only 38% of Republican voters were in favor of the tax. And finally, what is the likelihood of it passing? The likelihood of the Fair Tax Act of 2023 being passed in the House of Representatives is slim. As of January 2023, Republicans Steve Scalise and Don Bacon were not keen to the idea of the bill. Republicans only hold a lead of 9 seats in the House. They could only afford 6 more Republicans to jump ship before the bill would be dead. When it comes to the Senate, we know that Democrats control the chamber by 2 seats. Republicans would need 3 Democrats to join them in voting in favor for the bill. That is unlikely to happen, as Senate Majority Leader Chuck Schumer and several other Democrats have already dismissed the bill as nonsense. President Joe Biden has already stated that he would veto the Fair Tax Act if it miraculously made it to his desk. The overall chance of this bill to pass is 0. Thanks for watching. I hope you liked this video. Subscribe and comment your favorite part about it.